Hi, good morning everyone. Welcome to today's trade of the day. And for today's trade of the day, we will be looking at pound Aussie. Right, so what I have here is pound Aussie on the daily. And very interestingly, if you guys are actually followers of the Elliott wave theory, right, what we can see here very clearly is a wave 1 and 2 completed, and probably wave 3 has been completed as well, with a wave 3 target being hit. So you can see this is wave 1 and a completion of wave 2, and now we have supposedly completed wave 3. Theoretically speaking, wave 3's target should always be 161.8 Fibonacci extension of wave 1 to 2. Right, and we can see right here that price has reacted very nicely at the 161.8 Fibonacci expansion level. So knowing that price has reacted here, we should assume that after Elliott wave 1, 2, 3, we should do a wave 4 down. But because this is a daily and it's a bit too big of a time frame and we're looking at intraday trade of the day, let's go down to the 1 hour. So very quickly on the 1 hour, the market structure is very clear. Price is making lower highs and prices are making lower lows. Connecting all these lower highs together with a trend line, we actually get a very nice descending trend line resistance. Now we can use Fibonacci retracement of the last movement from the high to the low. Right, we see right now, opening up all Fibonacci ratios, we see that price has reacted at 23.6 and is actually pushing lower. At the same time, this is also a completed movement from the last swing low to the swing high, which makes Fibonacci retracement more reliable. We take the swing low to the swing high. Once again, open up all Fibonacci ratios and we see that the bigger 61.8 retracement is finding confluence with the negative 61.8 retracement on the 1 hour. So very quickly, we can actually have our intraday take profit over here. I'm just going to draw a box because it's never an exact number, but it's more of a zone. Right, so this is our take profit, our intraday take profit zone. Let me just highlight the levels. Okay, and very quickly, what we can do is we can actually find an entry at this area at the 23.6 retracement level. Right, so once again, anywhere below this descending trend line and our entry level is a very possible place for entry. So I'm just going to highlight at 23.6 and also the negative 61.8, where our confluence actually lies. All right, so we already have the direction and levels for entry and the take profit. Now what we have to do is to find the stop loss. By definition, the stop loss is always the level which we know for sure our trade is wrong, our bias is wrong. So I'm going to put the stop loss just outside of the trend line, right? So somewhere slightly higher. This gives us a very nice risk to reward. Okay, why do I put the stop loss over there? Is because if price were to reverse and break out of the trend line, firstly, price has broken to the upside. Secondly, price will have formed a higher high, showing that the previous market structure is invalidated. All right, so for that two reasons, we put our stop loss over there. Last but not least, to put the final nail in the coffin, right, we can take a look at momentum indicators. We see that price is actually holding below a moving average, which is actually holding price very nicely. So the EMA 21 is actually a natural moving average of the chart. MACD is below zero, showing that price is within a bearish environment as well. And that's all the time that we have for today's trade of the day. Wish you guys all the best. Trade safe, stay safe, and I'll catch you guys again. Thank you.